Good morning. This is Arlan Suderman, Chief Commodities Economist at Stonex, with this morning's commodity update as we take a look at the overnight markets and what's happening this morning. Overnight, we saw President Trump's reciprocal tariffs take into effect at midnight last night, and included in that was an increase in the Chinese tariff up to 104%. Now, there's some conflicting reports coming out of China, but we have to assume at this point, based on the overall sense of the reports, that China has raised its retaliatory tariffs to 84%. We saw a sharp decline in stock futures overnight as a result of that, and a sharp decline in crude oil. In fact, crude oil dropping to 4-year lows, down to just above $55 a barrel for WTI. And so a significant reaction. But stock futures held above the previous lows set during this tariff crisis. And we've seen quite a recovery till now, where we actually open day trade. We're trading positive at this hour as I speak to you at 9 a.m. Central Time. I think what's noteworthy is the fact that the grain and oilseeds traded positive even in the midst of that negativity. And so they continue to be resilient. There seems to be a sense that perhaps these grain and oilseeds, which have been hammered the last several years, may be a place for funds to look at when it comes to retaliatory tariffs, that many countries may be reluctant to put retaliatory tariffs on the food-based commodities. Now, that hasn't been the case with China. They have certainly put them on food-based commodities, but that's because they had alternatives. Keep in mind, during Trump 1.0, during the trade war, that China still bought everything it needed, and if it needed to buy from the United States, it did so and simply waived the tariffs when doing so. Keep in mind that when SinoGrain, their state-owned grain buying company, purchases, it's the right hand paying the left hand the tariffs anyway. And so they can continue to buy for the reserves if they desire to do so. So there are ways that they can manage this. But whether the retaliatory tariffs from China are 34%, 54%, or 84%, whether the U.S. tariffs are 104% or 84%, whatever they may be, all of them are high enough to pretty much shut down trade right now for most of the products moving. And that is a blow to China's economy. Yes, it creates some pain for the United States as well, but it's a particular blow for China. And China's in a position now, and it's kind of put itself in a position where it feels like it has to look strong to China. President Xi Jinping needs to save face before his own people, but he also cannot win this, in my opinion. And so his greatest hope is likely that he can buy enough time that Americans will feel enough pain that they will turn on President Trump. Congress would therefore cause Trump to back off and lose his authority to do these tariffs. That's China's only hope here of coming out of this without having to make significant concessions, which it deems to be painful. But for now, it's fighting the tariff war, mainly in the headlines. The market seems to realize that it really doesn't make a difference at this point whether they're 104, 84, 54, or what. That doesn't really change anything. In the meantime, other countries are looking to negotiate. The list is at about 70 countries that last that I saw. Europe and Canada are preparing retaliatory packages, but both have indicated that they will try to negotiate first. And that's what the president has been seeking, is negotiations to bring tariffs down. The president needs to see some movement soon. Keep in mind that a trade agreement can be over 1,000 pages long. Now multiply that times 70 countries. That's a lot of time to prepare all that. But the consumer may not give the president that kind of time. He needs to see some successes soon, to see some strength in the stock market. You see the strength in the stock market, then the consumer starts to feel better about things. So this is a little bit of a tug of war on tight timetable here that President Trump needs to see some successes. For now, we're seeing some strength. On the 301, Section 301 proposal, the port fees, that could actually be bigger than the tariffs. And so therefore, I have said that I believe that there will be a more pragmatic response when it is finally issued. We saw evidence of that yesterday. And U.S. Trade Representative testified before a Senate committee that they are working on revisions to that fee schedule based on size of ship, and also with some reductions for agricultural shipments. And so that's a move in a positive direction in regards to agricultural commodities. No real indication on energy at this point. So we are seeing some positive there. We're also seeing confirmation from USDA Secretary Rollins and others in Congress that they are working on the structure for potential payments to farmers beyond what's already been approved if this tariff war causes undue harm on farmers. And it's unknown yet the size and scope and timing of such payments if they happen, but we're probably talking about some months away. So that's kind of a wrap on what we're seeing in today's markets impacting them. Continue to watch. We saw corn prices, the lead corn contract today, trade to its highest level in roughly 4 weeks in the midst of this. That says a great deal. We're seeing strong basis in Brazil for corn and soybeans as Brazilian farmers believe that they're set to benefit from this trade war that we have with China. In reality, this does not, in my opinion, change things at all in regards to trade between U.S. and China for corn, soybeans, wheat, grain, sorghum. China hasn't bought any corn of significance in a year. It hasn't bought any wheat or grain sorghum of significance in the United States in 6 months. Soybeans, it ratchets down each year how much it buys. We used to sell them almost 40 million metric tons a year. Now it's down to 22 million metric tons and ratcheting down each year. And they've built up the reserves. As I've been warning for the last 2 years, they're taking more from South America than what they need each time South America has supplies available to build up their reserves so that they can wean themselves off of U.S. dependency. They will continue to do so. That is what they're doing. At the current pace, they don't need any soybeans from us, regardless of tariff war, until probably the fourth quarter. And so there is some time to work something out here. We'll have to see if that happens. It's not a time to panic. Show concern, yes. But for now, the grain and oilseeds are showing some resiliency. So that's today's update. Wish you well as you manage your way through this tariff storm until we come out the other side. It's probably going to be a bumpy ride, but hopefully we're in a bottoming action this week on this roller coaster of headlines. Thank you.